This is the Market Edge Tuesday Tech Talk. We're going to look at the markets over the last week and see what's going on, see if we can figure out what's we're headed for this week. Okay, we'll go down here and click on the market letter from last week. The CTI is at minus 10. We still have a bearish market posture. We had back and forth trading all last week. The makeup of the market was mixed. We had strength in utilities, healthcare, consumer discretionary sectors. That was pretty much balanced out by weakness in industrials, materials, and financials. Bigger picture shows ongoing strength in last week's best performers. That was utilities and let's see, the technology was neutral. Semiconductors weighed on the market over the last couple of weeks, and to me, it looks like the semiconductor cycle has probably peaked for a while. And we saw the Philadelphia Semiconductor Index close actually yesterday below its 200-day moving average. Financials are also backing off their recent gains as after the 10-year Treasury went above 3%, it's kind of backed off down here to about the 2.95%, which has kind of stalled out the financials. As I said before, the yield on the 10-year Treasury topped out last week above 3%. We have pulled below that. The market's kind of looking to tomorrow's FOMC meeting for May, where new Fed Chief Jerome Powell will be giving hints about what he thinks might be going on with interest rates going out the rest of the year. The market would like to see probably only one or two more rate hikes tops. But if he takes on a little bit more of a hawkish tone than his predecessor, Janet Yellen, we could see more selling going on once that statement comes out. Okay, like I said, the CTI is a negative 10, and that's actually scheduled to stay negative at least next week also. Then we'll have to see if the Dow Jones makes it could be extended if the Dow Jones makes a series of lower lows during the week. Once it makes a new low and we have the next week where it doesn't take out that low, then we can actually go back to a positive count on the CTI. That would be bullish. Actually, we have four of the cycles will go bullish at the same time. So we could get a pretty nice move here going further. Momentum was up a notch at +8. That's basically because the Dow Jones is underperforming the broader market. The other indexes are all only off about 6 or 7%, while the Dow is down about 9%. Breadth was negative at the NYSE. Advanced decline line lost 41 units, and the NASDAQ dropped about 917. So it's kind of mixed as far as the internal breadth goes. Sentiment is fairly neutral. So it's a -2. It's negative, which means you still have a little bit of bullishness going on in there. Industry groups. Let's see. We had the strongest groups were water utilities, oil secondary, oil field drilling, and medical supplies. And the weakest industries were home furnishings, appliances, tobacco, internet content, and insurance full line. Okay, let's take a look at the Dow. Okay, let's go out here about 6 months. There we go. Oops, let's go about this. All right, so you can see here since that February low, we've been kind of trading in a long triangle. You can draw a descending trend line through here, which has stopped the. Thought we were going to get a little break above that on the Dow, but we basically ran into that and rolled right back over. Let me change this down to a 50-day moving average over here. I'll change this to a simple, make simple on 200. Okay. As you can see that, let's see, 102. Okay, so there's the moving averages. Here's that descending trend line again, coming down, which has stopped the Dow rise. You can also see we're having lower highs. Starting to get here a pattern of almost lower lows. 200-day moving average represents support on the downside. With the deterioration in the market today and yesterday, that certainly is going to come into a test. We'll see if we can get hold on to that 200-day moving average, or whether we'll take this out. If rates, if the Fed is a little bit more hawkish and we do take out this low here, I'm looking at probably a little bit more downside, maybe about another 4 or 5%, which would represent a maybe 15% total correction on this move. Okay, here's the S&P. And you can see the same thing here. We have this descending trend line and a series of lower highs, and what could be, if we take out this 200, another more lower lows. The indicators remain neutral. Not much going on there. Just going sideways as we work our way out of this extended triangle period. Okay, here's the Nasdaq. This is actually we did rise to that higher high there, made it actually a new all-time high there. But since then we've been breaking off. We've had especially the Philadelphia Semiconductor Index down about 6.5% in April, and it is now trading below its 200-day moving average, which probably points to more downside for the technology sector. Today we have it's outperforming because Apple's earnings are coming out tonight, so we may get a little bit of an upside surprise. If Apple disappoints, could be an ugly day tomorrow. We'll have to find out what happens with that after 4 o'clock. Let's go take a look at the industries real quick. And if we look over the last relative strength, if we just went over this last week, they've changed a little bit. Oil still looks pretty good in here. It's off today, but I still think that $70 target is probably still in play. One thing that could prevent that from working would be the U.S. dollar, which is also has been moving higher and actually broke out. We follow this. We used to follow this in the other tech talks. This is the ETF UUP. You can see over here this breakout of the thing. As the dollar goes higher, that's going to start to affect the market. We're breaking out, this long range that we're in over here. We're back up above all the, let's see, above the moving averages, and that's going to put some. That could slow the ascent of crude oil up, but it seems to be a little bit more of a supply and demand issue on oil right now. And we're getting ready to go into the peak driving season here in about another month, and that could again have more of a drawdown on oil, causing prices to go up. Also, the conflict between Iran and Israel and what's going on in Syria is also keeping some upward pressure on oil. But anyways, you can see this is the UUP, which is the ETF for the U.S. dollar, breaking out the high of the year actually now. That's also going to put some pressures on multinationals, which could cause some earnings estimates to be trimmed going forward. And you can see the indicators down here. We're seeing some positive momentum. So keep an eye on that UUP. I still think you should stay long your oil stocks. Financials, if the FOMC meeting comes out a little bit more hawkish, that will still be good for banks, as the rising rates can help the financials. That's about it. If you have any questions or want us to look at any stocks next week, just email them in. All right, thanks a lot.